heard me last night. I'm Joel Henry from Bitner Henry. So we do a lot of property, casualty, auto, workers' comp insurance. We're opening up a new department for health and benefits too. So this is mostly in the property, casualty, auto, workers' comp lines. But if you ever have questions, I'm always happy to work with you on those. Okay? So the main point of this is there's always because this is our niche, or our agency's niche of working with a lot of nonprofits, human service organizations, and churches. There's a lot of new technology coming out in ways to reduce risk and take care of the assets that we have. So overall, just a broad overview. What is risk and insurance? Insurance is a financial plan during catastrophe. Obviously, I think you all understand that we want to use it not when we want it, but only really when we need it. Insurance, in theory, indemnifies you, makes you whole, and so unfortunately, making you whole isn't going to put you back better off, and there's always going to be costs that are included with it. And so it's for immediate and accidental, not wear and tear. But the main thing I'm trying to get across in this presentation is just how to avoid unexpected costs. And I think a lot of people have a misconception of insurance. Why they don't like insurance is because they don't understand it. And I get that. They don't know what their policies actually pay for. And so when something comes up and you have a wind-hail claim and you have maybe a percentage wind-hail deductible, you're looking at this, I got a $100,000 deductible and I didn't know about this? What the heck? I wish someone would have told me. And so I think some of the not understanding the product and not going over or having unexpected costs, non-renewals of a certain line of the policy, I think that's the reason why people get frustrated with it. And so my hope is just education and partnering with ministries to have a plan. And honestly, ministries your size, you should be, hope maybe not you specifically, but hopefully someone's reviewing the policies, reviewing the claims on a regular basis, and thinking, how can we, what risk are we willing to retain, when are we going to use the insurance policy, and having a really dialed-in plan for those situations. So, and then one thing, obviously we're trying to use this for emergencies. You're building a new building. We want to make sure we're protecting that asset. So insurance is, the theory about insurance is it covers an asset. It has to have an insurable interest. So it's something that you really care about, you want to protect. So those are the assets we really want to protect. So if you have maybe an older building that you're not quite as concerned about, those are the buildings we don't want to use the insurance policies for. So one thing, I'm sure you all plan ahead, a capital expenditure budget. One aspect insurance companies are always asking about is new roofs. And it's something that should be in every conversation, every single year, having your roofs inspected. How long does a roof maintain? How long do we have it? If you have an annual inspection by a roofer, try to get documentation. That's going to be your number one best bet when communicating with underwriting. And so then this is a capital expenditure budget. It basically just says, how much does it cost to replace the roof? How many years left? And then how do we budget per year? And so then this is hopefully something you're stashing money away, so then when these things pop up, you're not expecting, and you're budgeting. I'm sure this is something that you all have planned ahead. So I was talking a little bit about insurance. Just for this current year, property is still very challenging. It depends regionally where you're at, where property is very difficult. Obviously California, the wildfires, very challenging. Coastal regions, still very difficult. Texas, Florida, it's very, very challenging. Auto, as people are coming out of COVID, they're driving more and distracted driving. The auto rates are really challenging. One of our biggest claims we experience, fatalities, serious medical injuries, is auto. And so it's one where you really want to drill down on policies and procedures, screening drivers, and those sorts of things. We'll dive into it a little bit more later on. And then nuclear verdicts. So there are certain regions in the United States that are called judicial hellholes, and it's where there are nuclear verdicts. Nuclear verdicts are where you have a lawsuit. Say someone got hurt, and for example, there was a California situation where or no, Colorado, where that driver was on 70 and he killed 4 people, right? And originally they sued for $100 million. Everyone's like, whoa, 4 people, $100 million, $25 million a life? Well, if you go in front of the jury, that in front of the family, they may say, that's not enough. 25 is not enough. Then they reduced it to $10 million, so then it was saying $2.5 million per person. So then you're saying, well, my family member is worth way more than that. So certain regions are getting hit with tens of $millions of losses, which is affecting your umbrella excesses. You may be seeing this in your certain policies because they're limiting certain coverages, like your general liability umbrella may be limiting from $10 million to $5 million, or your sexual acts liability be reducing from $5 million to $1 million or $2 million. It really depends on your carrier, depends on your region. All right. So one key aspect to just keep in mind is loss ratio and types of claims. So loss ratio is just simply put how much premium you pay over your claims. Okay? And insurance companies don't make money unless you pay out at least 55% of premium, or for every, if you pay $1 in premium, you can only have 55 cents in claims. If you have anything more than that, they're not making money on your account. And it's because of all the expenses and all these factors. So that's one factor. They'll factor in the 1 year, the 3 year, and then the 5-year loss ratio. And then they'll look at repetitive claims, preventable claims, like certain claims they'll deem as preventable, like water damage, like pipe bursts, so those sorts of things are sometimes not seen well. They're using satellite imaging, so they're going to see deferred maintenance on roofs and things of that nature. So that's where the communication is really important. And then, certain regions are worse than others, but I'm seeing, and it really depends on the company. But because some companies are getting hit financially worse than others, but if you have a catastrophic loss, they'll see, okay, well, this is just a one-off situation. They do a good job overall. But if you have a bunch of small losses and then a huge loss, they may look at this as a larger issue and as a repetitive issue. So the number of claims, the types of claims, same types of claims. First question they're always going to ask you is, what are you doing to prevent this claim from happening again? So I say all that to, and then loss control. Sometimes you'll have loss control, someone tour your facilities. Try to do those and stay in compliance as much as possible, because lack of responding to loss control, they can non-renew policy. So I say all that just to get in the head of underwriting. How can we get in the best terms with underwriting and claims, and so things of that nature. Claims reviews. I think there's a couple different ways. I mean, it's not rocket science. Using an Excel spreadsheet, I have a template. Love to share with you. Really just takes someone sitting down with whoever handles the insurance for your organization. If you did it quarterly, semi-annual basis, we have a claims concierge in our office, and he'll have a breakdown of all the claims, the type of claims, so you can just try to prevent the claims from happening again. I'll give you an example. I had a church, and they had an individual who is a maintenance guy, facilities guy, and he had a couple claims with in his previous work, and then he moved to the church as a facilities guy, and he had a couple claims as well at the workers' comp, and they were pretty significant claims, like $50,000 losses. And he's a great guy. His body was cashing checks that his mind, he thought he could do, and so he kept getting hurt. And so eventually when you started looking at, this is repetitive claims, we're going to have to mitigate what he can do, have a work agreement. Hey, this is all you can do. You can't do anything more. We're going to sign off here, so it reduces your liability, and then we can have that conversation with underwriting saying, hey, we're trying to control this situation until he retires and things of that nature. So, and we had a at-risk boys' home where some of the workers were playing basketball with some of the boys in the home, and they were getting hurt as well. So they had to limit some of their operations. Some of this is common sense, but you can find out through the claims reviews in the Excel spreadsheets. So, and then this is just This is just the more detailed. Hey, here's all the claims and things like that. It's just good to be aware. There's a lot of workers' comp claims and slip and falls that you're not going to know about. And so, just because most times people just report it, and it's hard to keep track of all these things. but unless you look at the whole spreadsheet. So it's just something simple. I'd be happy to share with you at the end of this. So I want to just break down the biggest losses that you may experience. Some of this is common sense, and some of this I'm sure you're working on, but this is for liability. So we have the auto, the bodily injury for volunteers and employees, and then reputationally, sexual misconduct, embezzlement coverage, employment practices, cyber. Auto is the biggest one. And so this is the one where if you can micromanage one part of your ministry, this is one aspect I recommend. And one of the resources is Track. So this is a little GPS unit you can put inside all your vehicles fleets. And they can give you data, and they tell you how far you've driven, stops and starts. Travelers and some personal lines carriers will do it as well. I'm a little paranoid about how bad of a driver I am, so I haven't done it for travelers, but it's something where you have a vehicle fleet. It's good to manage that. We had one rescue mission as well we worked with in town, and they had a semi-truck, and they had a few accidents, so what they did was they managed their vehicle route, and so they tried to minimize left turns, tried to do the same route over and over again. The pickup spots were consistent, so just managing who drives, when they drive. The Track can see if, hey, they're going off on long lunch periods of time, or you can see if they're going to any sort of place they shouldn't be. Because vehicle accidents, again, are our #1 catastrophic claims that we experience when it comes to fatalities and injuries and things of that nature. So really trying to protect the volunteers and the workers that you have, and you can't stress that one enough. So screening drivers as much as possible, micromanaging routes. You can even do dashboard cameras if you wanted. That's out there. Regular vehicle inspections, maintenance of tires. And then if you're using personal vehicles on behalf of the organization, just make sure you have at least $100,000 of liability coverage. There's coverage called non-owned and hired auto liability. Doesn't kick in unless the personal insurance has at least $100,000 in it. So it's a complicated one, but